What's going on, money lovers? Welcome back. So today we need to talk about Alibaba. I've historically been hesitant to invest in Chinese companies. There's a lot of negativity. If you turn on CNBC, you got to avoid the Chinese stocks like they're the plague. And if you look at recent news, you can see a lot of their stocks have been tanking, Alibaba included, by not 5%, not 10%, sometimes as much as 40 and 50%. So you might ask yourself, why would I want to be involved with that? Well, today we're going to be talking about Alibaba and why I just started a position in it and why I can see this being a company that I scale up to being maybe around a 1% position in my overall portfolio. So stick around for my analysis of Alibaba and let me know if you agree in the comments below or what your thoughts are. Alrighty, so if we look at Alibaba here on Fidelity, you see it's currently trading at $194 and it's been getting absolutely punished. From a high of around $310, it is all the way down to $194 a share right now. Should I buy Chinese stocks? Don't be an idiot, says a strategist from Barron's. Equity score, very bearish. Love to see this. Be greedy when others are fearful. And that is just one of the smallest reasons to be bullish on this stock. When you look at the numbers that Alibaba is bringing in, it's pretty mind-blowing that it is trading where it is. We'll get to some numbers in a second. I'm going to show you their massive revenue growth and look at a few other important metrics. I don't consider myself a technical trader, but I think it is worth pointing out, if we look at the 5-year chart here, you can almost draw a line of resistance to where it sits right now around this 180, 190 line. So I think it is worth taking note of that. Let's just say it's around 185, and if the stock drops below that, maybe it'll crash really far, but I could see it bouncing back from here, getting back up to these highs. Once all this stuff with China dies down and people just get back to focusing on Alibaba as a business. So let's get into the fundamentals here. So Alibaba's current PE ratio sitting around 24, so much lower than the broad market. The S&P, I believe, average PE right now sits around 45. Now, Baba is set to report earnings August 3rd for Q1. This could be an interesting event, and if it goes anything like Amazon's quarterly report went, not that they had a bad quarter, but it just wasn't as good as expected, and the stock tanked. So I might wait till after this earnings to buy some more shares. I did start the position, just bought a few shares today, so I'll probably wait until after the earnings call to buy more. I also did sell some puts on it at around $150, expiring in January. All right, so let's take a look at Alibaba's revenue. This company is an absolute behemoth. Just looking at the past 5 years, go back to 2016, they brought in $15 billion in revenue. Today, that's up to $109 billion. Profits have been going up. Their operating income steadily increasing, sitting at over $13 billion. All these numbers look great, increasing year after year. Net income, almost $23 billion. Now, it's important to look at the shares outstanding as well because you don't want to see too much dilution. There are some more shares outstanding over the years, but it's not increasing too drastically to the point where I would worry about it. Earnings per share steadily increasing as well. And if we look percentage-wise, Alibaba's revenue ending March 31st, 2021, $30 billion, a 100% increase year over year, 50% increase year over year. And for the 12 months ending March 31st, they saw a 52% increase in revenue year over year. So obviously a lot of this has been bolstered by the pandemic and everyone being stuck home. So again, I could see this, falling a little short like Amazon's did, just because people are going out more now and maybe shopping from some other places besides online. So they've got total current assets of $185 billion versus liabilities of $62 billion. So that's a very healthy ratio. And then the last financial metric here I wanted to just take a quick look at. Cash flow from operating activities coming in at around $35 billion. I think this is really worth noting. If you look at Alibaba's monthly active users, mobile monthly active users, comes in at 925 million. You know what Amazon's is? 197 million. So the total addressable market here for Alibaba is just staggering. 4 times, almost 5 times that of Amazon. So just think about that when you see where Amazon trades at, Amazon's PE, and Alibaba trading at $180 with a PE of around 24 right now. So again, here's just a chart showing you every year that their monthly and annual active users just keep steadily increasing. The addressable market here of almost 1 billion people. Now we compare their revenue segments to that of Amazon. You'll see they're pretty similar. They are more heavily reliant on their core commerce division, which in the most recent quarter brought in $25 billion in revenue. Cloud computing brought in $2.5 billion. Digital media and revenue, $1.2 billion. So those are their largest segments. And again, it is worth noting the majority is coming from the core commerce versus when you look at Amazon. They're a little bit better diversified. Online stores, 53 billion. Physical stores brought in over 4 billion. Third-party seller services, 25 billion. Subscription services, 8 billion. AWS, 15 billion. So you could make the argument Amazon is better diversified. In the past, people have asked me, should I buy Alibaba? And I've always said, why buy Alibaba when you could buy Amazon? But your outlook on investing changes over time, and that's okay. When, I can no longer ignore the numbers here. Just looking at Alibaba's revenue, 28 billion. Total addressable market is just huge here, right? I think this is a great value play, and it can, give you some diversity to, some international exposure. And I do believe eventually all the issues in the news surrounding China is going to die down eventually. At the end of the day, a great company is a great company, and the bad news of things that are out of their control is not going to hold it down forever. And like I said, if I make this only a 1% position in my portfolio, very limited risk that I'm taking on here. And I could see this easily being a 2 to 4x, let's say, over the next 5 to 10 years. So that's a level of risk that I am 100% okay with taking on for that potential return. Let me know what you think of Alibaba in the comments below. Are you buying it? Why or why not? If you enjoyed the video today, don't forget to like and subscribe, and make sure you turn on that notification bell so you know when I post future videos. Now, the only other Chinese company I own is NIO, ticker NIO, which is an electric car company you're probably familiar with. I think they're the second best option right now to Tesla. And aside from that, I think I have some puts on Wish stock, and that's it. I have no other Chinese exposure, so I'm excited to add Alibaba to the portfolio here, and I think that the future will be bright over the long term for this company. So let me know what you think in the comments below. This is Vinny from the Investment Club, and I'll see you next time.